big story. Let's kick off with US earnings. Johnson & Johnson, as you pointed out, off air, the first big Dow component to report. What's happening on that front? All eyes looking at this US earnings season.
Yeah, Bronwyn, I think this earnings season is certainly going to be crucial. We saw coming up, pricing an absolute sort of Armageddon for the last earnings. They beat all the numbers. This earnings season, are they going to make the numbers? Is it going to be the profits going to beat? And more importantly, are the profits going to beat without having to go the cost-cutting route, slashing jobs? Are these earnings sustainable going forward and looking forward? We saw Alcoa last week. That was surprising profit, expected a loss. Big Dow component, Johnson & Johnson this morning, unfortunately missed on certainly their revenue was down, spooked the market a little bit. We've got JP Morgan Chase tomorrow, Goldman's coming up. So
it's a banking week.
It's a banking week. I think there's 6 or 7 big Dow components too. So certainly off next, see where we're going with this.
But as you say, Johnson & Johnson missing on the revenue line, and that is spooking the market.
Missing on the revenue line.
You've got to focus on that revenue line, because
without a doubt.
Are the profits only being achieved by cost cutting?
I mean, let's look at the bottom line. How good and how real are these earnings being driven? The first glance, Johnson & Johnson not missed. You saw the S&P sell up, Dow down 40 or 50 going into when I sort of left the office. So certainly, I think you get the feeling the market is definitely walking a little bit on eggshells here.
The Zoo survey out today, and that a German investor confidence number missed expectations again.
Missed expectations. I think what we're seeing here is a couple of weeks ago you saw a lot of bad numbers coming out, market ignoring them, pushing higher, breaking through sort of key technical levels. Now there's a couple of numbers that haven't quite fitted in. We've seen the US consumer confidence number miss a few times. That hasn't played. You've seen the US unemployment numbers miss. Now we're seeing the ZEW, which is an investor confidence number out of Germany, very, very key number. That missed this morning. We saw UK inflation a little bit later on in this morning coming out to also miss. So we're starting to getting mixed views. I mean, it's been a real tug of war between the bulls and the bears at the moment.
And that's why we're seeing those European markets dipping into negative territory
exactly, and I think we flipped in and out of positive, negative territory 5 or 6 times today. But definitely seems to be more leaning towards a weaker sentiment.
Interesting, that UK inflation number, because the debate, as you say, is inflation versus deflation, and we may be very close to that deflation scenario. I was speaking to George Glinos from ETM last night. He reckons that's the biggest risk to the global economy that we could face. Spot on.
There's a real tug of war between the deflation and inflation, guys. And of course, if you look at gold will tell you, well, inflation's a problem. Gold's in a little bit of a sweet spot at the moment. The trajectory, the inflation projections are pretty low going forward. Certainly the end of the curve is picking up. Gold bulls will tell you it's there. But unfortunately, the numbers that are coming out now, looking for sort of 2-3 months ahead of deflation. So I think this is going to be the big story. At the moment, the big story is gold. The big story is the weakness of the US dollar. I think going forward, you'll find you'll be covering more and more of the deflation versus inflation.
Have you been able to capitalize on this big run in the yellow metal?
No, I've never been a gold bug, and I've never quite understood it. And I think a lot of the guys who've been buying sort of new gold ETFs will find they 20-25% lighter where they were sort of 5-6 months ago. I think the problem for us and a problem for a lot of these gold producers is they wake up in the mornings and they see gold above $1,000. It's really positive, but they see the rand at 735, 730, and it must really be a problem for our local gold producers.
RMB Morgan Stanley coming out with a report today saying that the South African banks have significant earning potential going forward, and it hasn't necessarily been factored into the share price. Your view on the banks?
I think they're fairly priced. I think there might be a little bit upside. I think you can look at something like Nedbank possibly getting towards 130, another sort of 8 odd rand to go. Maybe sort of looking at Standard Bank back over 100 comfortably. I think the impairments have been increasing. I think the yield on the bottom was out at the R157 was out at about 851, 852. That rising yield is going to put a little bit of pressure on these banks. I think they're fully priced. I don't think there's much more legs in them, but I don't think they'll disappoint too much.
Where have you got your money at the moment? Is there any cash on the sidelines, or have you deployed it into the market?
We have deployed some cash. We are quite invested, but we're battling to find value. I think this is such a stock pickers market. We saw today classic Northern Platinum up 7%. We saw a pharmaceutical group like Aspen's down and Adcock Ingram's up. So it really, even in the same sector, there are stocks that are contradicting each other. So I think it's a stock pickers market. I think caution is needed, and we keep going back to our earlier conversation. You need to watch this third quarter, the second quarter earnings coming through from the States with interest.
Heed caution, are you booking profits at the moment?
We are taking some money off the table, and I think if you see what we're doing to the last week or two with this intraday volatility, it's probably, if you've made money, you'd be pretty wise to bank a little bit at the moment.